You are my homegirl who knows money. So can you take 4 minutes to explain to me what is this whole Robinhood thing? Because I was on the Book of Faces and everybody was like, oh, you gotta go to this AMC, you gotta go to this GameStop. And I'm like, number one, I thought they was closed with Toys R Us. But I'm like, okay, is that something that I missed? Did I miss something? What if something pops off again? Do I need to jump on something? Girl, what do I need to do with my money? First of all, wait, I ain't really got no money. Let's start there. These student loans are real. But let's hypothetically say I had like 3,000.
Okay.
Do I need to be on Robinhood? Like, what do I need to do?
Let's set the scene. So imagine that we're on a nice sunny day in a big, like a lake. Actually, no, hold on. Make it a bay, right? Because it's got to be deep. It's got to be deep water. So imagine that it's a sunny day. The water is sparkling, and there's boogie boarders, right? And the boogie boarders. And so imagine the water is the markets, okay? And then and a boogie board is just regular people, right? People that may not even be in the stock market, but are subjected to the stock market because we live in a capitalist society, right? So the boogie boarders are out there. And then you have people that are in kayaks, and the kayak people are like folks on Robinhood that may, be amateur traders, day traders, people that kind of get into the toe in the water in the market, but are not professionals. Then maybe there's, the catamarans. The catamarans are wealthy individuals. So people that have a little bit more sophistication and have money to burn and can take on some risk, right? So they're really in the market. Then you got the yachts, right? Yachts, right? You understand? So yachts are like, either people with ultra net worth or small institutions. So you think about people that trade money professionally, people that are actually doing this for a living, or corporations that do it for a living. And then you got cruise ships, right? So cruise ships are like the big money. Those are the big institutional investors that have a lot of capital. They can move markets. They're highly sophisticated. So think about like a Vanguard or Fidelity. A lot of the mutual funds and other kinds of big money that is helping the economy and invest in your pension plan, right?
So if I had like hypothetically $3,000 that I wanted to invest, am I a boogie board or am I a kayak?
You're kind of a boogie boarder, or if you could be on a boogie board. If it's 3,000 for that, you can lose the 3,000, and you have a little bit of savvy about the markets, like you've been reading some things, you've been learning some things, and you're ready to trade on your own. You could be in a kayak with a little bit of money.
If I needed that 3,000, like if I lost that 3,000, I was gonna cry and be like, I ain't never coming back to the waters. Then I'm on a boogie board.
Yes, actually, technically, you should be on the beach and not in the water at all if you can lose the money and be crying about it, right?
Invest it and sit on an investment, then I'm like a kayaker.
If you want to sit on the money, you would be giving it to somebody like a cruise ship. But let me say something else about the cruise ship. So the cruise ship is, it's fun, it's safe, it's traditional. It's got a lot of elders on board, kids, and so that's what we call more traditional investing. So think about where you have your retirement savings, your 401k, your savings for your kids. It's safer money. It helps regular working people get access to the markets without a lot of the risk.
Okay, so I need to be on the cruise ship.
Yes, or you need to, give your money to the people on the cruise ship, right? And so, but most people are either in a boogie board, they're not in the markets by themselves, and they're leaving it to the other types of investors to, manage the market for them, and they're on the beach, right? In this case, with Robinhood, so Robinhood are people that are, want to invest themselves, like kind of get their feet wet themselves, not give their money to someone else to manage, like a cruise ship. They're actually trying to, learn it themselves. And that could be good and bad, because you end up with what happened this weekend with the GameStop, where it's a social media fad, and people don't really understand the market dynamics, because what's happening is it's not just the cruise ships, it's not just the kayakers. There's somebody else is really important part of that equation, and that's Godzilla, and he's sitting on the beach.
But if Godzilla at the beach, I'm not going to the beach.
This is why everybody, when you come to the water, you have to have water safety. And so part of the problem is Godzilla is the hedge funds.
Okay.
Now, what happened with GameStop, you mentioned Toys R Us early. Everybody knows that Toys R Us kind of going out of business. There's a lot of other companies like GameStop that were on their way out of their natural life in the market, right? Their business model was failing. Godzilla is, a predator. He looks for opportunities to eat up the things that are naturally going by the wayside.
Okay, so like death to Godzilla, right?
Well, he's a necessary evil in the market, right? You need scavengers. You need people that are going to keep the market forces, balanced. But normally when Godzilla's hungry, most people just get out the way. The problem with this situation is that the kayakers started looking at Godzilla chilling on the beach, minding their own business, and they didn't like that he was having so much fun.
Okay, so in real terms, so Robin Hood was basically looking at Godzilla, the hedge funds, and was like, you over here sunbathing,
Yes. And to be fair, Godzilla was preying on people's downfall, right? Godzilla was preying on GameStop's downfall.
Okay.
And the kayakers, people in Robin Hood, decided they didn't like that equation.
Okay.
So what did they start doing? They effectively started throwing rocks at Godzilla.
Okay.
And messing up his money.
Got you. So the people on Robin Hood, let me get this straight because this is how I heard it. They basically were like in a chat room and they were like, oh, they're trying to put GameStop out of business. They're betting on their demise. So let's buy up all that stock and mess up their money.
Yes.
Even though Godzilla is a predator and basically predator, like eating up other people's money, but they don't like it when it was eating him up. And I don't understand that. So that's what I don't understand. Like, what's the problem there?
Well, I mean, a lot of it is just the market. Little guys are tired of the big guys having all the fun.
So let me get this straight. It's okay for Godzilla to be a predator and eat up the prey, but it wasn't okay for the prey to nip back at the predator.
I mean, the prey can nip back, but there's always consequences to that.
Okay.
Right? You heard the expression poke the bear. Like no one ever asks what happens next. And so let me tell you why Godzilla's mad in the first place, right? Okay. Godzilla was mad because he's minding his business. He sees that there are stocks and companies that are going out of business, like GameStop, like Toys R Us. And Godzilla did a very sophisticated type of trade, which is called a short sale, which basically means, and let's put this in terms that everybody can understand. Imagine that people are still out here buying apple bottom jeans, paying top dollar for apple bottom jeans. Okay. Right. We know, like GameStop, that don't make sense in 2020, right? But in 2021, excuse me. So imagine if Godzilla saw that there were people still willing to buy apple bottom jeans. Let's call them $30. Okay. But clearly Godzilla don't have any apple bottom jeans anymore. But he knows that his friend, let's call him Thanos has some apple bottom jeans. Right. And so he says, hey, can I borrow your apple bottom jeans? And I'm going to sell them to this other person. And don't worry, I'm going to give you your jeans back. I'll just buy a new pair and you can have those. But give me a little time to do it. So Godzilla's trying to make money, knowing that apple bottom jeans are probably going to be, like, say they're $30 today, maybe they're $5 by Friday. But Godzilla can sell them now for $30. But in the back of his mind, Godzilla knows that he can sell them today for $30 and then buy another pair of jeans back for like $2 on Friday.
For example, like, let's say Godzilla's like, I got some cousins coming to town. They want these apple bottom jeans. I'm going to sell them for $30. That's not right. You shouldn't do that to family. But he knows that when I go to buy them back, they're not really worth $30. It's really worth $2.
Exactly. So he's going to buy them back for $2.
So really, Godzilla, the hedge funds, they just, they're not right. But if somebody willing to buy it, it's on the person who buys it to know more about the stock.
Exactly. There's a price that's set. That's the free market. As long there's buyers and sellers, and as long as a seller is willing to sell something for a price that a buyer is willing to buy it at, that's the price. So right now we've got apple bottom jeans for $30 and a GameStop at $30.
Gotcha. So, here, I'm ready. All right.
So imagine that Godzilla gets the apple bottoms. Mm-hmm. He sells them at 30. Okay. So he now has to give apple bottoms back to Thanos at some point. So he's got to go buy another pair of jeans to give back to Thanos at some point. Gotcha. Now imagine that all these kayakers are watching this happen, and they know what Godzilla is up to, and they see an opportunity to mess up his money. As Godzilla's trying to buy jeans
right,
at the new low price,
right,
all the kayakers come in and take all the apple bottom jeans out of the stores, out of the market, off eBay, right? Drive the price of apple bottom jeans up. So now they're not even $30, not even $50, not even $90, not even $100, they're $350. So Godzilla still owes Thanos his jeans back. Godzilla has to make good on giving those jeans back. So he has to buy jeans at whatever price they're available because he has a contract with Thanos for his jeans. So Godzilla, because of the Robin Hooders, because of the kayakers in this situation, the kayakers started throwing rocks at Godzilla.
Got you. But right? I mean, the kayakers are more like, small money people who were like, okay, Godzilla gets to do this. Let's mess up Godzilla's money and get our money. So the kayakers make out okay, right?
Yes and no, right? It's satisfying to see Godzilla a little upset, right? Maybe some little cuts on his shins because they keep throwing rocks at him. But the people that really only make the benefit of that are the people that started this situation in the first place. Gotcha. What happens is if you have people that are buying so the first kayakers that threw the rocks, right? They knew what they were doing. They were antagonizing Godzilla. They wanted to mess with his money a little bit. They didn't particularly love apple bottom jeans, but they didn't like Godzilla was making money off of apple bottom jeans.
Got you.
Understand?
Yes.
So they start throwing rocks. And then as they start throwing rocks, meaning they're buying up the GameStop, the money, the price of the stock keeps going higher and higher and higher. And every time that price goes up, Godzilla's money gets messed up a little bit more. So more people start getting in on the game. Now you start hearing the chat rooms pop off.
Right. So that's when like the chat rooms, Facebook. So like people who had like a little bit of like GameStop, let's say they had like $30 and then they look up and they had $90 and they start making a post like, y'all got to get on this GameStop. Y'all got to get on this AMC. Y'all got to jump on here. Yes. And then you jump in at $100 and they're like, yes. I just made $200. So it's more posts and more posts, yes. But actually it's going to go to $350 and that's good.
It's good, but it's better for the people that got in at 30. It's not so good for the people that got in at 325.
Right.
And could lose money because what end up happening is that it's an artificial price. These are apple bottom jeans. They're worth $30. And so eventually the price is going to fall.
So the folks who got in, like even at $200, because it was going to go to $350, they still made out good, right?
I mean, some of them did, yes, but only if they sold when they should have, because the stock dropped in 48 hours. Now, remember, the kayakers are surfing the waves. This is a short-term investment, you're supposed to be in and out. And so people that bought it and didn't and waited too long for it to, go down, a lot of people lost money. That's what not folks are talking about, right? The little guys, a lot of little guys got hurt. Right. In this situation.
But
right?
Godzilla got hurt more, right?
I mean, short term, yes. I mean, Godzilla has some little cuts, but here's why this is important. Godzilla can be hurt short term. The Godzilla in this situation, they lost billions of dollars, but that's not going to keep somebody down, not like a Godzilla. So why this is important is that Godzilla is going to go, he's on the beach right now. He was minding his business, right? Now he's hurt. And Godzilla heals himself by going into the water. And when Godzilla goes into the water, everybody on the water ends up feeling it. And that's why you see what happened the last couple of days where the market went down significantly. And this is not an isolated incident, because when the kayakers threw rocks at Godzilla, what ended up happening was a trigger reaction where, I don't know if you checked your 401k, but it's probably down a little bit.
So that's what I was going to talk about. So in this same analogy with the kayakers, the boogie boarders, and the people who just at the beach, the people at the beach who ain't even in the market were still affected, because if you got 401k or 529 for your kids, it got hit by these kayakers throwing stuff at Godzilla when Godzilla went in the water, right? Yes,
because here's the thing. Godzilla is what I said before, he's a necessary evil in the market. He brings balance to the ecosystem of the market. And Godzilla is always going to make himself whole. And so if he lost, there was one hedge fund that lost $10 billion total, right? that hedge fund now has to do what? Try to make up the losses, which means, and I use the Godzilla analogy because what happens when Godzilla puts his foot down and steps, it's a ripple effect in the water.
Yeah.
And he has to go further and further into the water, further and further into the market to make bigger waves to make his money back up.
Gotcha.
But what does that mean when he steps his foot down and there's a little ripple, but he steps his foot down again, there's a bigger ripple. He moves one more step, there's a huge wave, right? So the huge waves end up wiping out the little people, right? You just a little boogie boarder. Boogie boarders are with not a lot of money in the market. That big kind of swing can wipe them out. You know, more sophisticated investors that have other kinds of protections or money to lose can absorb those kind of shock waves. They're going to be okay. The cruise ship probably out in the Lido Day, like, oh, look, honey, there's Godzilla, right? Because they're going to be fine. They're able to manage around it. But what happens to the kayakers that were throwing the rocks in the first place?
Right.
Some of them got capsized. Right. And those weren't the folks that were throwing the rocks. Those weren't the folks that provoked Godzilla in the first place. Right. They got caught up in the melee. They got caught up in the excitement of it. Right. Like, stick it to the man. And yes, it can be exciting to see, you know, the little guy play the big guy's game and win temporarily. But what we have to understand as investors, especially unsophisticated investors with just a little money to play with, is that these have repercussions long term, right? Godzilla's always going to eat. Godzilla's always going to make himself whole. And so where we can maybe, you know, be smarter about this is making sure that we're not jumping on to fads and showing up late to the party where the people who've already thrown rocks have left their money, got their money and gone home. Right. And the other folks that show up trying to catch the fad ends up catching a wave instead. And then Godzilla has them upside down.
See, and that's what I'm talking about. And is that why Congress is like talking about this in the first place? Like, the reason I was like, oh, this must really be something, is Congress is talking about regulations. Now, of course, in my mind, I was like, oh, big money must have really lost some money. But and I'm like, are they just trying to like protect these particular money people? But I'm trying to understand, and I think you like kind of explained it, like how it affects the entire market, like the entire US, I guess, stock market, all the markets, like. Right. So tell me, well, okay, this is what I ask you in real terms. Tell me why I don't want to be a first round kayaker, like, for real. Like, why don't I want to stick it and leave? Like,
you can't. Well, I'm not saying you can't be, but you have to know when to get in, get out, and that requires a little bit of more sophistication. That requires some reading, some really understanding market dynamics, and a lot of people are in over their head. They in too deep water too early, right? So I'm not saying don't be a kayaker, right? But
so don't not do Robin Hood. I
don't not do Robin Hood.
A swimmer before I go in deeper waters.
Exactly. And so you can catch bigger waves, right? Gotcha. Because where people get wiped out is that they go too deep in and then they catch a big wave that wipes them out.
Got you.
And so it's developing your surfing skills. And again, if you don't want to be a surfer, you can give your money to the people on the cruise ship that will manage it for you. When Godzilla goes into the market to make himself whole, right? These big waves come, and the market likes volatility in some ways. The people that can surf, that can surf the waves, make money on the waves. Gotcha. The people that are long-term investors are fine because they're thinking long-term. So you're not worried about the choppy waters in the short term, right? You're not worried about the day-to-day stuff. You're thinking about longer term. That's where the cruise ships are. But the people that other companies, other stocks, that affects the whole market. When you have a lot of volatility, the market can go down. And so you have good stocks going down, getting hurt, that have nothing to do with what's going on. So it's a bigger impact. So like you saw on Friday, as an example, market was down 600 points. A lot of good stocks like Apple were down. Apple is held by a lot of 401ks and retirement savings accounts and things like that, right? Or just regular investors that are buying reputable companies that are profitable, and so they got their money in just an investment account, and those things take a hit when people antagonize Godzilla. Now, you mentioned Congress. So Congress would be like, Godzilla's in the water, the waves are going crazy, the kayakers who were throwing the rocks in the first place are capsized. Someone, help me. Congress would be like the Coast Guard showing up. The Coast Guard didn't know what happened, right? The Coast Guard didn't see Godzilla chilling and getting rocks thrown at him, right? Coast Guard shows up where Godzilla's already walking around. They're like, help me, Godzilla, right? So the Coast Guard is trying to figure out, and Congress's job, for the most part, is to protect the little guy, right? To protect the interests of the American people. And so where this starts to get really interesting is if Congress is going to think about the kayakers that threw the rocks as a one-off event, or if this is new behavior that they can replicate. And if it's new behavior they can replicate, no, say like they target Godzilla today, say they target Thanos tomorrow.
Gotcha. Right? And so even though a part of me is like, yeah, go kayakers, another part of me is like, girl, you better look at your 401k because these kayakers are playing with your money, whether you like it, whether you want to play with Godzilla and Thanos or not, they playing with your money.
Right. And another way to say that, playing with your money, is called market manipulation. And so that's what Congress is trying to do, is make sure that investors are actually of good faith when they go into the market. Remember when I told you there's buyers and sellers, and the market is only as trustworthy as we believe that the price that is set is of people that are of good faith, that have a consensus about what something should be worth. On the other side, if you got kayakers that are driving up a price, not because they're actual investors in that stock, but because they want to mess with other people in the market.
But it's literally Robin Hood, robbing from the rich to give to the poor, but that has fallout on the...
So it does, but the other thing to say is Robin Hood is in service to the little guy, but Robin Hood is not the little guy. Robin Hood is part of the cruise ship community, part of the yacht community, right? Robin Hood is giving access, but they need the cruise ships and the Godzillas and the rest of the ecosystem and the market to survive. What is their job? To protect their customers and protect the market itself. Because the thing is, and we saw this with 2008, we saw this in March with the coronavirus. And by the way, this week, the market was down as much as it was during the coronavirus back in March. It was the first time the market was down that much. And because why? The market doesn't like uncertainty. With coronavirus, it came out of nowhere. You can't predict what's going to happen next. You don't know how it's going to affect certain things. And with these group of kayakers throwing rocks at Godzilla, if they can replicate that, the market has no way how to bake that in. They have no way how to predict it. In the market, that uncertain, a scared market is a down market. And a down market hurts the actual economy over time if it continues to be that way.
I'm gonna give you another analogy. So like, let's hypothetically say, just in case I do wanna be a kayaker, right? Let's say it was February of 2020, last February, almost a year ago. And I'm watching international news and I'm hearing on the BBC about the coronavirus. And I'm like, you know what? I'm about to buy some Clorox stock. You know, like let's just hypothetically, it's February though, it's not even here yet. And let's say I buy in a good amount of Clorox stock in February 2020. And it would have done really well in March, April, May, June. But by July, I needed to have sold it. I don't need to keep it for the entire year because at some point Clorox stocks, they would have gotten more product. So it wouldn't have been worth as much. So even if I could have bought some Clorox at $20, just hypothetically, because that's a whole number, at $20. And even though when the demand came in, it went up to say $60. So I made some money, right? Mm-hmm. As long as I sell while it's still at $60 before it goes back to $20. Yeah.
Yes. And I think that's the way to look at it, because you're looking at a big picture trend. That's something that's happening to the whole market. And you're making an assumption about the goods and services that are going to be most important to that kind of situation. The equation is risk. The more risk, the more reward. Mm-hmm. But the more risk you have, the bigger opportunity that you have for everything to go to zero. And so most people that are just getting in, that are amateurs, that don't have a lot of money to play with, should be on a Robinhood, but maybe think about the kinds of investments that give you that little bit of taste, that little bit of adrenaline, but you're not going, in too deep water. So, as example, don't go chasing waterfalls, stick to the rivers and the lakes that you're used to.
Oh, okay. So just to be clear, so if I, for my 2-year-old was like, here's $5,000, I'm gonna put in an account, I'm not gonna touch it. That needs to go on the cruise ship.
That needs to go on the cruise ship.
But let's say when he turns 3, he gets some birthday money, right?
Right.
And he's like, $200 worth of birthday money.
Right.
I could take that to surf with to see if I can make him a little bit more money, because I can replace 200.
Correct.
If that goes poorly, I can replace that.
Correct.
But if it does not, then okay, baby made some more money, then roll that into the cruise ship.
Correct. And when you and what I said before, know when to fold them, know when to hold them, know when to fold them. So like any good casino, because that's what the market is, you got to know when to walk away from the table and cash in your chips.
That's good. See, I know I got some smart friends. My friends are cute and smart.
and we want everybody to be wealthy. That is the goal for here. You know, I just really encourage everyone to not be afraid of the financial markets, but to, get involved where it makes sense and pay attention to the trends and know that some folks are not well-intentioned and they need other kinds of people that don't know any better to feed their interest, like those first folks that threw the rocks. They knew what they were doing, but they needed everybody else to get on board to actually make that impact.
Wow. Anyway, all right. Well, girl, I'm gonna call you next time. I got some questions.
Please do, because 2021 is where the money resides. Where the money resides. Yes.